Hi, this is Adrian Larson, President of Pathlight Investors, here with your Pathlight Insight. Today we released our second quarter investment review, and I wanted to provide a brief synopsis on the content. If you'd like to get more in depth, please click on the link and you can access the full report. Well, we've completed the first half of 2015, and images of treadmills and hamster wheels are filling our minds. 6 months into the year, and the S&P 500 really hasn't done anything, only managing a 0.48% gain through June 30th after a 0.23% decline in the second quarter. Now, through this year, the S&P 500 has traded in a very tight 155-point range, trading from roughly 1980 to 2135. And actually, during the second quarter of the year, we traded an even tighter 75-point range. But as mundane as the year has been for U.S. stocks, we actually really like it. And because after 6 straight years of appreciation in the S&P 500, we needed some level of consolidation. And we've been extremely encouraged by the market's ability to shrug off bad headlines and not trigger a sharp sell-off, as buyers have come in to support any pullback and sellers haven't been able to pile on. Now, as calm as our markets and our news has been here stateside, it really couldn't be any different internationally, as 2 major events blanketed the headlines during the quarter. Now, the first one was the 90s-like NASDAQ era rise and subsequent fall of the local Chinese stock market. Now, the Shanghai Composite roughly doubled from February of this year through June 12th, the peak, as Chinese government actually promoted the participation by locals in the stock market. Paper profits and paper fortunes were created during this time, much like the dot-com bubble that we saw. And just like the dot-com bubble, when the sell-off started, it was swift and it was violent, turning what was a positive story for global markets into something that was beginning to create fear about global market meltdown and potential financial contagion throughout the world. Now, luckily, the Chinese government stepped in and began to support Chinese stocks, and as we actually saw, roughly 33% decline from peak to roughly trough in the Shanghai market, we've now seen those stocks stabilize and have come up to begin the month of July. The second story was Greece, and I'm sure you're as tired of hearing about Greece as we are of speaking about Greece. We have been held hostage by Greek financial woes for the last 6 years, but really things finally came to a head as the Greeks failed to pay a $1.7 billion payment to the IMF, causing a default and ultimately a renegotiation with the Eurozone participants. Germany has held a hard line, and Greece was ultimately forced to accept a deal that meant more austerity. At the end of the day, the Greek economy is in shambles after 6 years of austerity, and they just have no way to pay back the roughly 250 billion euros of bailout loans that they received after the financial crisis of 2008. But ultimately, again, markets had roughly priced in this Greek issue, as the S&P 500 only saw a roughly 3% decline as the headlines, I guess, as the fever reached its highest pitch. So really, we are comforted and confident that markets have already priced in this Greek issue. Again, we've been dealing with it for 6 years, so it should be something that we're used to. Now, back home in the U.S., the story really remains the same. We've got consistent and steady growth. Economic data has rebounded in the second quarter after the weak first quarter, as most people have expected. And ultimately, what we're waiting for here in the States is the announcement of the first interest rate rise by the U.S. Federal Reserve. We had thought potentially there would be a June rate increase. Now the general expectation out there has moved to a September rate increase. All of this is, of course, dependent on the data And really, it's anybody's guess as to if this actually happens. If you'd like to get more in depth or have a conversation about what we're talking about here, please don't hesitate to call us. We thank you very much for taking a listen to us. Bye-bye.